Okay, hello everyone. I like the music. This is Stop Losing, Start Trading. This is the live trading show that we do every week where Rosalie and I, Rosalie aka the Crypto Queen, we go over the markets but also the trades that the intern is putting in for us. So we discuss trades in the open here. This is not financial advice. This is just our way to contextualize world events, trends, trying to see if there's a trade for that type of assumption. Again, we're uh, trying to showcase the panoptic protocol, but everything we say here is also part of any options traders kind of knowledge. So very excited about this week. The second half will be when Brendan will join us to talk about the best and worst trades during the BTC trading contest. This is actually very cool. It's been going on base. And in the meantime, we've seen some action, some international fear. I'm sure the fear index is spiking, but yes. How are you feeling today, Rosalie? Given
Good. Yeah, I'm doing good. I'm really excited about the base competition. We'll be joining myself as well. I think I've learned a lot about options now. And yeah, I downloaded Coinbase derivatives and I was trying to kind of apply my knowledge there. And I thought the app was so confusing. I feel like our interface is really intuitive, even though some people might find it really confusing. I think it's just kind of what you're used to. But yeah, no, I'm good. I'm
so
excited.
we should call Brian. So so I know that Coinbase has some derivatives tab or options. This is what you tried out. Is it
Yeah,
on the mobile on the
yeah.
website?
It's on the mobile, and it
Okay.
just asks you if you want to buy or sell, and then there's some time frames that you can kind of set up, like a stop limit or something. And there's some metrics, and I'm not really sure what they
Wait,
mean.
is it options or perps? Or do you know? Or can you know?
Um, I think it's probably perps, but yeah, it doesn't like give you any kind of like risk analysis or how much you might be earning. And so from what I'm used to on our interface, it's just like buy or sell. And I'm like, well, I don't know what that is gonna get me. And so I don't
No, I
know.
mean I think perps they all look very similar, whether it's hyperliquid or GMX back then, or even like all of the perps exchanges. They have the very similar setup, but it's very like you have to get used to the order book and the like you see the price moving and these bars and it's very directional. And again, as we've seen with even the Steven Wynn, like even the large traders are probably FOMOing in and out and not even understanding. So yeah, I mean, I think the options trading world is and the UX is so bad that again, at least we're trying to make it simpler and then a little bit more maybe looks information heavy, but again, you need some information. You cannot just say I'm going to trade XYZ, um, which is what maybe sometimes the intern is doing. Let's go over the markets a little bit. It's been again a lot of these macro slash fear slash maybe attacks that we're seeing. You see this in the crypto markets first. Again, a lot of the trading stops. You have futures overnight, of course, but this happened last night, I believe. Bitcoin was hit a little bit, whereas again, I think particularly Israel and Iran seem to be kind of in a tense situation, and that led the price go from what was about 108 to down to 103. Now it's recovered. I think the regular traditional markets have recovered as well. It's always weird, I guess. Yeah. Do you do a rush to your trading account and sell when you hear news of bombing in the Middle East?
No, no, I never sell. I'll sell when I'm 45. By then, I'll break even and I'll get out.
45 is so old. It's an eternity away.
Yeah, no, I think it's I've always learned that you do not react when the price moves significantly. It usually ends up being a bad choice. It's like, your emotions. You gotta like sit with them for a second and make sure you're clear-headed when you make a decision. And so same goes for
Let's
finance.
say people panicked, people sold. Last night, 11 p.m., we're here. What would be an options trade maybe that you do when you see that stabilize?
When it stabilizes, yeah, I
Yeah,
mean,
at
you
least
try.
my reaction is that I'm reacting. I'm seeing pain or panic. I wait and then I do something. I pounce. I guess. So what would
I
you
would,
do?
yeah,
Say,
try to capitalize on that volatility.
yeah.
Strangles seem to be the move for if price can recover. I mean, it depends on how far it goes, right? But
I mean, again, I think even the Trump index and the real active like fear that we're been seeing, it always comes back, or at least it's not something systemic like COVID and big. Of course, it's like so unknown. Without seeing it, it's unfortunate for everyone involved. But again, bombing, we see this happen so many times. So I would also kind of sell puts here, maybe even be more bullish than straddles. But you sell a put, this would have paid off. I'm probably was in bed by 10, so I didn't see it. But both Bitcoin saw a downward move that it recovered. Same thing to some extent with ETH. Yes, we saw this big sudden move, but it's been recovering since then. So you can imagine saying these 2,500 puts, you would be somewhat in the money. This is a little bit how kind of, yeah, as you say, capitalize on volatility, see how the markets react, and kind of see some, yeah, you can restore maybe after it's moved. People that panic say, oh yeah, maybe it's time to buy cheap. So what we see as well is in the volatility, any down move now, this one has been associated with a somewhat of a spike from 74 to 80 IV, which is also what you see in the the implied volatility index. It's reactive. Um, yeah, if you remember Nathan's piece about spot vol correlation, this seems to be counterintuitive, but a lot of what we saw with Ethereum and Bitcoin is that it is a little bit more like a commodity where big price moves are on the upside, and this is when you see a spike. Now you have a downside move, an increase in the volatility. This is a little bit more like an equity, so it might be even driven by more retail focus or something like some people that are um, selling everything across the board, whether it's their stocks, futures.
Yeah, speaking of Nathan's research bite, I was looking through our UI and some recent trades, and a lot of people have been doing this perp reversed payoff.
Oh, yeah.
Yeah, I don't know if it was because of the research bite or if it's just a really commonly used option strategy, but definitely a lot of people
Like
are
the risk reversal, you mean?
yeah, yeah.
Yeah, and actually, we can hop on the interface and show what it means. But yeah, the risk reversal is actually a very like it's a good strategy because selling puts has limited upside, and you can add more to it. You can add a call, and because options on Panoptic are free, you can also even buy a call that's out of the money and then kind of get a good hedge. But yes, what you want to see is volatility increasing. That will drive up the price of the options. Now it's stabilizing, maybe, but at a higher price, which is kind of also what you want to see. Same thing with Bitcoin. I would expect also. Look at this, yeah.
Wow.
Bitcoin markets are much more mature, much more liquid, and it's back to where it was to some extent. These can be arbed out overnight. This is what we see here. So this, I think, Bitcoin includes deribit trading, but also maybe IBIT and kind of the ETFs. Could be also CME, which is the oh I don't want yeah CME, which is also 24/7. Actually, let's see. Solana has also. Oh, this one's weird. Okay. It went up, never come back. It has a much less liquid options market. Finally, let's go to the whole market. I don't know how to do it, but it seems to be tracking Bitcoin. So this is the options trading, maybe 301 class. Volatility has some mean reverting properties. A lot of the sudden moves are like the world only ends once. So you see a big move, but then after that, the fear kind of decreases. So this is always why you see it relaxing. Bitcoin was very quick to come back. ETH has maybe stabilized higher, but still not very high compared to what it was with a few weeks. But yeah, the big moves lead to fear, but then that the role of an option seller, the role of a volatility harvester is to capitalize on that and kind of provide the service, provide liquidity, be harvesting that increased volatility to now bring the markets back.
Yeah, great time to sell, to be an option seller.
Yeah, I mean it's scary. Emperor not lost. Oh my god, LP positions are again subject to emperor not lost. But then you think about this. This is when you have a big move that you have maybe more bang for a buck, more return. So speaking of returns, this is the interns portfolio. We have several markets with positions open. The price was kind of sudden. Maybe I think it was like 10% or 6%, which is bad. But then we structured our portfolios that we're not subjected to these big price moves. Even 6% is not that big in the crypto world, but nothing seems tragic if you want, because we have a positive balance in all of the markets. So $41 in BTC ETH, $17 onto your Bitcoin, $70 on USDC, $1 BTC, but also $43 on ETH Eigen. So we are harvesting this. We have positions on, which is the best position, the best place to be in. Yeah, so $122 to over on the portfolio.
It
Which
looks
market do you want to
good.
look at first?
I definitely want to check out the ratio trade, just because they both kind of, oh,
Yeah,
see, recovered.
it's and this ratio now, again, I don't even know where it went, but this is the ratio of ETH to BTC. Uh, Seems like the ratio went down a little bit, which is BTC now has overperformed or ETH has underperformed, and this is also what you expect. The price may have been stable, so this is a bearish trade. It's bearish. Ratio went down since we've minted, which is what we wanted, and yeah, making a good amount, 8% in 2 weeks. Do you
Yeah,
still
we're
want to
getting,
keep it on, you think, or you want to change this?
I would still keep it on. I mean, I think the spread looks really nice at the moment. So
Yeah, let me see.
getting
Can I
some
do?
extra money from option buyers there on each leg, right? So that's nice.
Yeah. So this is one where you're selling, people are buying, so they pay you more. Both the call and the put have some liquidity. You're the whale in that strike. Oh my god, you're the biggest position. Two people are buying. Yeah, this is kind of the it's a delta neutral trade as well. You have twice the revenues. This is the bread and butter for at least my own trading and the interns. And yeah, a lot of people may be scared about the losses on both sides. Oh my god! But it's actually it's not as bad as it looks, because we have some pretty good range here, and then the more we wait, the more we earn fees. So this is fine. All
Yeah.
right.
Good. What about, yeah, ETH USDC? I think we have most of our positions there.
Yeah, there's one open, and I think last time we thought about opening a new one because we were at 23% margin utilization, which is actually fine. And yeah, you can think of that. Yeah, let's see this position. What walk us through this position? What should we do?
Yeah, I think this position looks good too. It's only 3 days old, so we're getting an extra spread on one of our legs, but they're both in range. Profit is going up, and fees are being accumulated as well. So this looks good as well. What is the price between? Yeah, I think this is a fairly wide
Why?
range. So yeah, nothing to fear about.
This is a good trade because we are, so this is the delta neutral part. So I'll make it worse, but we minted this at 2,700 thereabouts. Now it's gone down. Even though it went down, we are earning. We're making money, and we're earning a little bit on the price move, but it's not impacting us that much. You can imagine that if it were to go down to 2,200, we would have a $20 loss, but at the same time, we earn fees. And if we were to hold the asset itself, we would have, again, a $200 loss. So the delta neutral structure makes it so that you have a pretty good resilience to price moves, which are reasonable. Again, 6% is still large, but then you have zero loss, basically. And most of your gains come from Streamia. So yeah, minus, is this yesterday? Yeah, this is also when the price did move. This is another thing. You want to be in range, and this is fine. But when there is a big price move, people trade, lots of activity. You see an increase here in the rate at which you accumulate. And can I see which one is this? So this is USDC earning more fees. No, this is ETH or USDC. Let me see. The two sides go at different pace if you want, because if the price goes down, people will be selling ETH. They will be paying fees in ETH side. You have more ETH accumulated, so that, I think that's it. But yeah, that ETH will go faster. And then, yeah, light blue is ETH. So yeah, okay. So I was right. If you have one price move, you earn more fees in a weird way in the depreciating asset, because people sell, people move the price down, they pay in that input that they say I want to sell ETH for cash, so they pay more ETH. So that's why you see the two moving apart. And yeah, so this is you're accumulating some ETH, then the ETH accumulation rate is much smaller, quicker. You have yeah, a third of the position was earned in a few hours in terms of fees. So it's also one of those where it's hard to predict, but if you capitalize on this, you can catch almost a falling knife, but you can also have some returns there.
Yeah. Okay, great. I think, yeah, maybe we could open up another position,
Yeah,
but
I mean, let's do it now. This was my next step because we're kind of okay. We have what looks like delta neutral, but if you look at the deposits, we're still bullish because we have some ETH deposits. So again, you can look at only your positions or your deposits. Here it's still bullish. And yeah, since we're kind of low in utilization, I would also create a new position. Um, and then from the interface, we see the risk is that we don't get liquidated, so it's fine to maybe add a new position. Let's have a look. Do you want to try this risk reversal trade or the
yeah,
entry?
definitely. Yeah.
Okay.
I
So,
just can't decide if I want to be bullish or bearish, but I mean, maybe we can continue to be bullish.
so this, yeah, your whole portfolio is a bit bullish. The risk reversal is that you have, I mean, I'm making it maybe worse, but you have these two legs, which is one in range. This is going to earn fees. This is going to be kind of bullish in nature. And the other one is also some type of protection or hedging, which is if the price keeps going up, you're not losing out. If I were to remove this temporarily, the put has a limited upside and maybe some, I don't know what a catalyst would be, but a hugely bullish event means that price shoots up to 4,000 overnight. You're losing out maybe, and that's where the risk reversal can be useful. You have this now out of range. It's just for protection, but if it still exists, it can catch, and you have a much higher return if you were with this. So this is when you want to be like very bullish, actually, not ultra bullish, but very bullish. And you can do the same thing with bearish trades. Uh, it would be a bit different, but you had a similar thing, which is you expect the price to go down. If there's a huge crash throughout to it, 1,000, you can actually capitalize on that. But yes, like always, what's your assumption on the price of ETH over the next month? Or maybe you could do it weekly as well.
It's hard to say, right? Because I guess right now, it's already happened, and so it makes more sense for the price to recover. Although it's hard to like know with our current economy and everything what might happen over the weekend. I'm sure that our president might have something to say about what's going on, and that
I
might
think he
not.
said a few things which they don't move the markets anymore. So I think
Okay,
that yeah,
so we're no longer being.
the impact of any tweeting has been reduced quite a bit because I think people got burned by like not believing the tweet, not believing the tweet. Oh, maybe the tweet is real, or maybe or not, and then oh, it's not real. So they said let's not even look at it.
Then I think it would make more sense to stay bullish and to yeah.
Yeah, so the way to create these risk reversal is this long perp. It's still a bullish strategy. Long perp is where you want to be in. We can look at the weekly liquidity. Oh, this is interesting. Right, see, there's one bar of liquidity here out of range. That might be the perfect hedge there. Because if you were to buy this one, you'll be in range a little bit. You would be paying this one is free.
Yeah, definitely want because it's far in the future anyways, right?
And
So
there's one seller. Okay, they are in the money as well. So they may still keep it on. Sometimes you have to worry when you buy it out of range because person could force exercise you, but this is flat for them. Whether they keep it or not is just opportunity cost. So maybe it's fine, and we can have uh, what looks like quite bullish. So would you have a target in mind or a range on the bullishness of it? The risk reversal
um
is just going to be an insurance policy, but if it's just no need to exercise that insurance, is it going to go up back up to 2,800, or no, if we
yeah,
go down below 25? What's your
I think definitely will be between 2,800 and like 2,400 probably.
okay? And maybe so it's fine sometimes to pile on to existing ones. Um, Yeah, let's do this one, 23 to 2900. And you see the range here. If it goes below 2300, then you're losing a bit. But then I think it's a good range, and we have some protection. If it does shoot up, you have this upside.
No, this looks good. I think, yeah, if we really are worried, we could maybe try to hedge the losses as well with a different strategy. But for now,
Yeah,
I
what I'm
think
not gonna advocate. You can buy another, and this is multi-legs. You can get loss very quickly, but if we say, hey, let's me buy a put option, and you have either this type of payoff. Oh, now this one's interesting, or not. But yeah, I would. One of those is that in the options world, you create individual positions. You have some little kind of assumptions for each one, but then you look at the whole portfolio to manage. So yes, this is a pretty interesting one, and maybe I'll put it on myself. But yeah, risk reversal, bullish in nature, with some upside hedging, because if the price does go up, you have more returns. Uh, Again, I think the likelihood of a upside move might be larger than the likelihood of an downside move, so I'm also a bit bullish on that. So okay, cool. So let me copy paste this. The intern could look at this, you guys as well, on the comments on YouTube, or yes, if you can replicate this one by looking at the trades. Actually, let me see. Can I do this on? Yeah, don't this. So again, all of the positions that we're creating has a unique weird token ID identifier. It's such as 0x280. This is kind of what the smart contract uses. Now you can just copy and paste this. Uh, but yeah, one again. So we can go back to the portfolio, but I think it looks pretty good. I looked at the other ones. It was not something that we had kind of okay. We had a large kind of position that needed to be managed. Uh, One thing that is important, so the eigen pool, if you remember, we had one trade which was great because it stayed in range the whole time, did not move much, and we earned a lot of premium. And this is another one that I looked at this morning, 58% P&L in 2 months. And we can have a look at this. This is a short call, but it's also one of those trades that work pretty well. For some reason, the eigen markets are very stable. This is the position where 2 months into it, back to the same price pretty much, but we earning quite a bit of fees. Basically, 50% of your returns are fees. It's going up constantly. This is still maybe a good position because it's back in range, back to the starting point. This is what you want to see. You want to see the market cooperate, go back to where you started, and earn fees the whole way. And this one, it may not be because we're bearish again, but because we had some hedging to do. But this is another trade that is actually best case scenario as well.
nice. Yeah, I think it's grown quite a bit. The payoff curve is shifting upwards.
Yeah,
Yeah.
and it's a bit uncommon, but this is the range. And now on the down upside, we're also protected. So if this is a call option and there's a lot of risk to the upside normally, but now the fees kind of nullified this all the way. We're almost to the point where even if it does leave the range by a tiny bit, we're still in the green, which is very, very like the best case scenario again. So uh, unless you do this on Panoptic, it's quite impossible to generate this payoff. Now here, this is very easy. So very, very cool. And yeah, I think that's it. So we'll stop here. We do want to go to the second half, but this was, again, one risk reversal trade on ETHUSDC. We were able to revel in our profits in the different pools. The price move that seems to be quite drastic of 6% had pretty much no impact on our P&L because we set it up that way. If we see a 20% move, it's a different story. But now 0 to 10% is, from the digital neutral perspective, quite easy to manage. So overall, Intern has been doing great. Rosalie has had some good insights, so we'll see if that bullish trade will pay off. And yeah, when
Hopefully. Yeah, I'm very excited. On Tuesday, I'll be speaking with someone from synthetics as well about perps versus options, and yeah, kind of figuring out what you want to do. And I think really risk management is at top of my mind, because holding simply, like, you're just always losing. And so what can you do in the meantime to either earn fees or earn yield, and kind of make sure you're not falling under.
Yeah, I mean, the perps world has taken a lot of attention, but I'm actually like maybe a spicy take. It's quite a crappy way to trade, I'd say. Yes, you get leverage, but you get liquidations very, very easily. It's a like double-edged sword for sure, but it's not meant for speculation, I'd say. People don't trade futures to you can scalp a little bit, meaning that you can trade intraday and do some tiny bit. But if it's long-term bets, there's better instruments that have less risk and also potentially higher upside. Of course, options is doing this, and holding the asset is also this. But I feel like the 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 way to use perps is for hedging a different portfolio, a different exposure, but just pure speculation. It's actually, I'm sure the numbers also speak for themselves, but quite difficult to pull off. So, all right, so let's go and bring in Brendan. Wait, oh yeah, there we go. Hello, Brendan, and yeah, thanks, Rosie. So again, intern will be up 400%, I'm sure, by the end of the year. But yeah, this is good.
That's
But
401 more percent than another influencer in this.
Infinity. If you're negative, if you're go to zero, and any amount of profit makes you infinitely better. So there we go.
So can you
Hey,
actually
what's up,
go
Brendan?
negative on these platforms, Hyperliquid, or is it's collateralized? I assume.
Yeah, I think the guy lost like 600K, and I would imagine that it's less than his collateral, so you can go negative 100%, which is liquidated and like wiped out. I don't know exactly how margining works, but you cannot go more than 100%. Or maybe you can. I guess the liquidations is quick enough. If you do it on margin in a traditional account, you can actually be on the hook for more than what you have,
And
because
do they
the
call
margin
you
call.
up and put a lien on your house? And
That's right. It's a margin call. You have a day to respond. I've never been margin called myself, but it's like forgiving. But then if the market keeps not cooperating, then you put $1,000. Maybe you owe $2,000. This is actually pretty bad.
I assume that the margin calls come quite early. Centralized exchanges don't want to deal with any debt.
Again,
Right?
no. I think
Uh-huh.
if a COVID like crash happens and the one day you
Yeah.
have probably thousands of margin calls, like the everyone will be, as you say, you can put a lien on your house. Everyone is on the hook because it's fairly yeah. This is TradFi has figured out in a way to work within what used to be phone calls, really, or telegraph, anything that was transmitted took some time. You could not respond right away. You assume people had money to put back. And the whole system is built around these kind of chain of intermediaries that need to call one and one and one and one. And they have the broker dealer on one side, the clearinghouse on the other, the users. So they all have to agree. Whereas in the blockchain world, all of it is atomic, all of it instantaneous. You are liquidated. Too bad. We don't allow you any reprieve. It's instantaneous. You just have to manage better. And that's kind of the whole system of more intermediaries to spread out the risk is totally made it irrelevant, because you have one bulletproof smart contract that can never fail in a way.
Yeah. Too bad, but at least you can't go negative past what you put
Yeah,
in.
exactly.
So, anyways, we are covering the best and worst traders and trades. We're 2 weeks into the Bitcoin trading competition on Base that we launched at the beginning of the month, and it goes till the end of the month. And it's not too late to join. So if you're watching this, you can still deposit and trade and be eligible to win. Let's take a look at the current standings on the leaderboard here. I'll share my screen, and we'll see that, we still have a good amount of time, 17 days left in the competition. So we're not even quite halfway through yet. And we have some cool prizes here, USDC prizes. We'll be sending that on Base this time. So if you do win, you'll be receiving it on your Base wallet. Also, some hefty amounts of points being awarded. So these are panoptic points. We call them pips. So a very nice reward there of getting both points and USDC, and also this great looking mustache pillow thing for the top volume trader.
Oh,
So
are people really trying hard for the top volume? Let's go back to who's the.
let's take a look at the volume. And so the worst trader actually, who happens to be Nickel Alchemist. We're not going to count these ones because no, they didn't get liquidated. I don't think. I think they just withdrew their capital, which in this metric brings you down, possibly to 100. But Nickel Alchemist is the worst trader and the highest volume. So it could be self-sacrifice to obtain this.
Oh, that's right, gunning for that pillow, sweet pillow.
Yeah, it's worth it. But we'll take a look. Actually, we don't want to roast anybody here this time. So we're going to take a look at nickelalchemist.eth's account. We'll also take a look at the top trades, the top two here. So I'll just switch over there.
Last competition, people got lucky because the price of ETH exploded very suddenly, and that like 150% might be like an outlier in any week or 2 week period. Now you see a little bit more, again, maybe conservative profits, 3%, 2%. Again, half of people are still positive, half negative, but it's now sideways markets. Even if it was a real trading competition, could perps is quite hard to trade. Again, you don't ride the wave as easily, but yeah.
Yeah, that's right. And a big difference is this P&L doesn't reflect your deposit kind of fluctuating value anymore either. So you're going to see a pretty big difference on this competition. But everything's relative to each other. So if you can beat the average panoptic trader, then you're going to do well here, right?
Yeah.
So whoever is, I think
if you are just doing nothing now, we count your PLP deposits if you want. So you earn fees, and maybe it's really 0.1% for the 2 weeks, and then this is when it analyzes like to 5 to 10. And I'm sure this is if everyone trades super badly, you could still be on top. But now, yeah, we do reward. It's almost per trade. If you trade and you make money, we count this towards your positive P&L. And if you don't trade, we just use the compounding effect of the PLP deposits.
Yeah. So the PLP deposits, you're earning basically passive yield on your deposits. Who's paying you? Well, Nickel Alchemist is paying you. All these other volume traders. So they pay 0.2% every time they open a trade, 0 when they close. And that gets redistributed to everyone based on your portion of deposits in this pool. So we can take a look real quick at a couple of these best and worst traders, and then we'll go into the best and worst trades after that. So we'll keep this relatively quick. Let's jump to, let's see. I gotta find Nickel Alchemist is here. So we'll share this tab and zoom in a bit. So down, not down super crazy. I think they are down 6.56% in their portfolio. It looks like they're doing a lot of smaller trades, trading often.
And could you imagine the fees paid also go into your P&L? So if you trade a lot, this is extracted. So even though he may be kind of positive in some trades, because you pay a commission, it kind of lowers a little bit down the amount. But yeah,
a little bit. Yeah, I think it's actually this big trade down here that lost $78 in the account 7 days ago. So that was during the competition. So trying to make up for that.
Can you look at this one? I think the price did go down, I think. So if you look at this one, I think the timing was probably wrong in terms of entry.
Sorry, you want me to take a look at this?
Yeah,
bottom?
Exactly. Yeah.
Sure. Let's click into that one. And we'll share here. What happened on this short perp?
Oh, so okay, let me move our faces around. It was minted last week. Hard to believe, but the price was 101,000 last week, and now it's a bit higher. So they were probably more down, but then the recent crash from overnight made it a bit less worse. But
yeah, we are up from there. So that was 1 week ago, though. So this position is definitely weighing down on on that score there. But lots of new positions open in the last 24 hours here as well. Some of them positive.
Very bearish though on these. I mean, yeah, a bit of both, I guess.
Yeah, I mean, overall, if we look at the overall portfolio, it
Oh,
is
can
bearish
you
here.
click that? Yeah, with deposit. So I think Nick is probably, yeah. Can you? There we
Now
go.
it's bullish.
This is probably a vol harvesting strategy, which sometimes goes wrong when there's a big move, but allows the fees to be neutralized, and even with the huge like zoom in, the price could go up quite high, down quite high. He's not going to be affected as much. So it always pays to look at the whole portfolio P&L because you have this component as well.
That's right. So, yeah, makes sense. I think it's a different strategy. Do you have any tips for? So nothing we say here is financial advice, of course. Please do your own research. Any tips for this account here?
No, I think it's fine. I would probably try to be a bit more capital efficient, and like there's a lot of synthetic long and short. So again, with the drawing, I can kind of recognize, but then position 1, position 3, position 5, all of those are synthetic short or long, which is fine. But you could combine some of those into a single trade if you want, meaning that you can go long on one side, short on one side, but you have maybe a straddle that you sell and a straddle that you buy, and that is kind of two different trades that are managed differently. Um, because I think that strategy seems to be aiming towards delta neutrality, but because they are buying and selling and trading these directional instruments like short or long perps, they will net out, but it's a different way to manage. If it's one short strangle that you sell, then this one may not need to be touched. And then if it is a long strangle, then maybe this is the one that you apply. So I would also try to explore the straddles and the delta neutral strategy as a whole, one block that's neutral, as opposed to creating long on one side, short on one side that are neutral at the end of the day.
Yeah, I'd be curious to hear this account's take on why they're trading so many different positions at the same time, because these are all open at the same time as opposed to one conglomerate position. I do notice a lot of these are smaller positions based on the margin used, whereas this one position here is
I mean,
much.
look at the one that says negative 3.75%. So this one, yeah, this one is actually interesting. If you click on it, this is a short perp like position. Are the two in range? Because now this is a short perp, but they're earning a positive spread if you want. So this is getting paid 1x, which is almost like an LP position on that because of the buying activity. Maybe it's they're buying, but it's also like the funding rate can be positive and negative for these short perps. So this one is extremely positive, actually, quite surprisingly, like 1x.
Yeah.
Whereas if you normally net one against the other, you have like 0.1, 0.2, 0.3. So this is a trade that does have a lot of juice in it because it earns a lot of fees and is directional, which is a very good. Like if you are bearish, then that's the best trade you can create.
Yeah, that's very interesting. So it might be trying to harvest the different IVs at each strike then, because
Yeah,
this
exactly.
is a very good way to do that. As you're mentioning, it's a positive funding rate pretty much for them. Or yes, I guess the funding rate is they're earning the funding rate for this position. So very cool. All right. Well, thanks for the tips. An interesting account. So very, very nice and on track to win the Michael Saylor duel there.
Unless someone is really motivated to suppress that thing from maybe Michael Saylor himself would come in and try to win it to burn it forever.
Exactly. So we'll take a look at this next one. So I think this is the best.
Yeah, exactly. I was going to say as well. Yeah,
The second best. I can't remember. It's one of the two.
I think this is the best.
Okay, so they have 3 short puts open at the moment, and they're all in the profit. They were open quite a while ago, over a week ago, and so they're actually technically up.
And this is the right directional move. I'm sure if you click on it, it was at 101,000. Now it's 105. Even though it went down, it's still in the money. And one thing that's interesting, yeah, kind of back to where it was, but the fees make it worthwhile. So this is kind of one of those.
Yes.
And then if you look at their portfolio, they started with only cash, only USDC. So that changes the payoff a little bit. This is quite bullish, but then they probably have more USDC accumulation in mind as their strategy. They only deposited the USDC. Now, if they were to close their positions, they would have some BTC that is coming from the fees, but that changes the profile. So there's less risk maybe on the downside, because if you have some BTC deposited, you lose. Now it's kind of flat, and all of your PNL comes from your positions. Again, if you use USDC as your numeraire. So yeah, it's actually, if you're bullish, and this is, if this was, yeah, there's no change because it's cash. If you're bullish and this is what your assumption was, this is the best trade. Selling puts, I mean, we'll have to look at the setup, but selling puts, getting paid more on those, kind of 20% more than Uniswap on two of them, and the break even gets lower and lower every block, so they are kind of definitely in the right track. And yeah, that, I'm not surprised this is the one that wins the most. A directional play on the sell side is more likely than not being what we win in this type of market.
Yeah, and from the LP perspective, these are just 3 LP positions that are in range. The price has kind of returned back to normal. The main difference here is that they are earning more in Panoptic than they are on Uniswap, indicated by this spread here. So you see this position, for example, is currently earning 20% more in fees. Who's paying that? It's whoever is like buying this liquidity position on Panoptic.
Maybe it's Nickel Alchemist buying left and right these puts.
Buying those perps, yeah. And then this position as well, a 20% gain. And this one's almost the same as Uniswap, it's just a 0.2% increase. But you see that most of the P&L on these positions is actually coming just from simply the fees earned, and that nice boost. This is baked into this number. So the additional 20% on Panoptic is causing these fees earned from.
Yeah, you can look at one of them. I don't know if it works on base, but yeah, look at this one that's been open for the longest. Yeah, you can see the fees accumulated in the Premier tab, and this is going up to the right. But at the same time, we have, let's see, we can compare to Uniswap. Let's see if this breaks or not. We did some work to fetch on-chain data from the Uniswap smart contracts. Okay, I'll have to look at this.
I think it works on mainnet, but maybe not.
Exactly. you can look at the values and compare directly, and then if it's 20% now, but maybe historically it was 5% or 10%. But yeah, that's also another way to show a bit more explicitly how much better you are on Panoptic versus Uniswap. But yeah, this is definitely, and same thing as before, where the slope is constant. You have these sharp moves. In the case of the one that happened over the past day, is that people sold BTC. They wanted to get out of their position. Most of the fees were accumulated on the BTC side. So in that case, you have a kink in the BTC. Whereas maybe before, when you had people buying, they supply more USDC, you have kind of different rates. So these two do converge one another, but you can see signatures of the price moves as well on the rate. This is a theta over time, but yeah, on the rate of accumulation.
Awesome. Well, so we'll quickly jump over to the, I believe would be the second best account. Ooh. And this is very cool because they only put in a position 3 days ago. So illustrating it's not too late to join in, to really get those gains if you're if you're on the sidelines looking to hop in. And they really just basically have a short perp type position or short risk reversal ish. I mean, one's higher slope because looks like they're using a little bit more margin. I think actually, maybe not.
No, the margin, maybe, I don't know if it makes sense to show the position size, but yeah, the margin is more efficient. So yeah, I would imagine that the
on the long.
Yeah, exactly. So
this is a bigger position.
Oh, can you click on the delta? Delta has a number to it.
Do I just click here?
Yes.
On this?
Yes. So it's too small. But the you can see how much delta you get, in a sense, how much exposure you have. So you have not enough digits, but negative 0.001, and also negative. So it's very negative. Anyways.
Yeah, not enough decimals there. But a very interesting position. Just the price has kind of moved down a little bit in the last 3 days. So earning this user the second best spot here. Okay.
Can you look at with deposits? Maybe this is also another one. Might be misleading because they may have a bunch. Okay, it's less bullish. Oh yeah, they do have some BTC deposits, so maybe at least looks to be stabilized. So I don't know if people are taking this into account, but yeah, this is also another one where it's with the deposits with the option sold. It's like a short put totally, meaning that you kind of nullify that exposure on the put side, and you have something that's very flat at high prices, which is almost like a short put. But yeah, the way to fully grasp the risk profile is to have these deposits be included, and then gives you the payoff like that.
Yes. All right. Well, great tips. I think we're learning a lot about for the more advanced users on some of these features to really understand and take advantage of them. We're going to cover some basic trades. Maybe this will help some of the more beginner viewers learning about puts and calls and some of these perp strategies. So we're going to look at just the best and worst trades on this whole market. So we've been looking at the best and worst traders. Now we'll switch over to the trades, and we'll have you guess, what do you think is the best trade? And this time it's going to be percent wise for the best trade I'm going to pull up in this Bitcoin market.
On this on BTC or all markets?
Just for this CBBTC
Oh,
market, we're going to look at the best percent trade.
yeah, I don't know. It's a week. In the week, we're pretty much almost back to where we started. But we've seen it looks like last week actually we've seen a increase and then a decrease, and then back to the beginning. Pretty much 105 at the beginning, 105 now. The worst trade, let me see, is a short put that someone put in 2 days ago, and then it went down, selling the top.
Okay, worst. Okay, we'll jump to the worst then. So this is in terms of flat absolute terms. So you're saying short put. Let's take a quick look here at this CBBTC. We actually have a short perp. Sounds similar. So it involves actually buying a put and selling a call, which basically is short the market. They put it in though just over a week ago, so on Friday, when this live stream was last week, and the price has actually
Yeah, it was way worse, I'm sure. 24 hours ago too.
Yes, because the price is back down now. So yeah, they have paid some funding on it. Interestingly enough,
Very tiny, yeah. And then it's a reasonable trade, whereas the fees that they pay is 18% more. They get paid 17% more if you look at the multipliers on both legs. So the fees kind of net out to something very, very small, 0.01. So it's like almost free. But yes, directionally, you have to be right for it to make sense.
Right. They haven't really paid much in funding at all. Compared, most of the losses is just purely directional, as we see here, almost $90 in losses, but less than $1 in funding paid out of that. This is kind of a new tab that I haven't seen before, the commissions tab. I believe this may have been an update.
Pushed, I think, this morning. Yeah.
A new feature here. So this is kind of fun. And this looks like the initial cost to really open this position. Is that right?
Yeah, that's right. We deduct this from your account, and it's less when you look at the main portfolio page, but we're not showing it on that position. So it's was probably misleading a little bit, because at mint you have to pay, so technically you have to catch up, similar to a swap or any type of fees you have to pay. It has to be included. So in that case, yes, we do show now and offset the P&L by looking at the commissions paid and taking this into account.
Great. It's good to get all your costs and losses and gains out here.
Yep.
So very clear here on this trade. We're going to jump to the best trade now. You said short put for the worst trade. It was a short perp. What do you think is the best Bitcoin trade?
Yeah, I'm also bad. So I would also say let's do perps. Short perp was the best one because they timed it right, and they opened it up 2 days ago again.
Okay, so better short perp than this one. Let's take a look here. Let's see,
Okay.
what is this? Very interesting. don't know why it slopes down a bit there.
Yeah, it's a
But
new feature as well. So yeah, you can
uh,
look at this. So this is also a slightly revamped way to show the P&L. It's a short position, and then they probably opened it a day ago. They were very, very well kind of timed. Uh, yeah,
yeah, so we got 2 short calls here, really from here being sold. Um, as you say, well timed here. Because short calls, if you sell a call, it's bearish. If you buy a call, it's bullish. So this is a bearish position that has timed the volatility and the price negative price fear very well here, and has done extremely well, earning over $100, putting that nearly 10%
ooh,
gains on this trade. A fourth, yeah, about a fifth of that being in funding, basically earning these fees as well. So overall, great direction and getting paid to do so.
but yeah,
Yeah.
this is again a bearish trade that was timing it appropriately. Yeah, I don't know if you can zoom up a little bit. It seems to be jumping, but
Yes, it's not letting me hear, but
okay. All right. So the reason why we show this weird slope as well is that also a little bit of accounting. When you mint a call option, and this is maybe kind of a little bit digging deeper as to how Panoptic works. If you mint call options, you borrow ETH and move it into Uniswap. If you mint a put option, you borrow USDC and mint in Uniswap. If the position is in range, you actually have to swap. So the Panoptic protocol takes this into account, swaps the right amount. So you borrow 1 ETH for one contract. It has to be 50-50. So you swap part of that ETH for USDC or BTC, but put it in there. And you have a LP position that has some value, but at the same time you have a debt of 1 ETH because it's what you borrowed. But sometimes that swap is advantageous, and you may have some leftover ETH as well that you have in your wallet. This is the in the money amount. So it's the intrinsic value, if you want, of that option. So here, what we got slightly wrong is that in the money amount, which is you borrow 1 ETH, you only deploy 0.9 ETH in total. You get to keep that 0.1 ETH in your wallet. And now we were looking at this 0.18 in terms of USDC instead of being ETH as well. So if you think about it, you have a position which has a 0.18 of exposure. If the price goes to zero, it should also go to zero. That's why you have a slope there. And if you go to a trade one, you can create a position, and it's going to be even. It's a bit weird, but this is kind of the way it works. So hit the trade button, and you can drag this one, and in a weird way. Again, I don't want to scare the users, but the way that this works is that can you swap the price with the refresh button at the top?
Yes, I think.
Yes. So yeah, this is a bit. Don't be scared if you see this. This is just a slightly more accurate way to look at the payoff. But if you drag the call all the way to 1,000, you'll see this weird thing. So again, this is considering the fact that you have some intrinsic value in ETH and not intrinsic value in USDC, which is what we had before. So the payoff is not flat. It has to go to zero because you own some ETH. And if you were to scroll all the way to the right and put the strike at the 4,000, you don't have any intrinsic value, you don't have in the money, so it really is flat there. But as soon as you have something that is in range or fully kind of on the other side, then you have this extra amount. So that doesn't change much if the price doesn't move a lot. But if you have a 1-day option, for instance, or you trade these very narrow positions, that affects your P&L. It makes it, unfortunately, a bit worse on the downside, but less worse on the upside because you have kind of that extra ETH to cover your position. So overall, this is just one. Now it's 100% accurate payoff because you have this ETH in your account that's accounted properly that way.
Interesting. So how is this different from traditional expiring options and how they're.
Yeah. So in the expiring options, you uh, one worry why this is different is that all of these positions are virtual. You don't even need to hold the assets. You can sell GameStop options even if you don't have them in your balance sheet. We all heard about that. And because it's virtual, then you can do the accounting this way as well. You don't need to physically move ETH or USDC or swap it. It's just by the time this is all done, then I can pay you. And this is what pretty much happens. They say, okay, I have this position. It's expiring in 2 weeks. So maybe in 2 weeks it's gonna matter, but it's at the price is gonna be set that we care. So the it's less physical. It's a derivative. It's a fake instrument that tracks the price of a real asset. And that's why you can be kind of saying, yes, we'll pay it when it's done. We don't have any exposure. Whereas here in Uniswap, in Panoptic and Uniswap, it's physical derivatives. Maybe that's a new term, but it's real funds that need to move into the real pools. And now you have these real exchange that happen. So I wouldn't even dare to think that fund managers and options traders know about this solely. Took us 4 months and a very, very diligent user to say, hey, why is my PNL wrong for us to discover this in a way. But yes, it makes it in a weird way different. Maybe V2 we will swap back to USDC, whatever in the money amount you have, and that's it. But then in the current protocol, you have ETH in the money, you have this that has a value that changes with price, and this has to be reflected there.
Yeah, I was interested. So why didn't the protocol just swap your leftover amount on the side into the non-risky asset? But it sounds like it kind of keeps a portion as the risky asset. So technically, if the price fell to zero, that portion that you kept aside would go to zero. So your limited losses is the amount that inside of the option was turned into the stable coin, let's say, and so that part you're never going to lose.
Yeah, and on the flip side, if the price goes up, you're not on the hook for -1 ETH, but rather -0.9, for instance. So that also limits the losses. If you set a call and the price goes wrong, you have some protection. So maybe in a more positive manner, you lose a bit more if the price goes to zero, but you lose a lot less if the price goes to infinity.
And so if you're selling a completely out of the money option, then this doesn't actually.
Yeah, it's not relevant. Yeah, and if you do a spread as well, it's less relevant because you move funds from one place to the other, so you don't have that much of a in the moneyness to it. I don't know. Yeah, exactly.
It kind of balances out because you set aside some.
Yeah, if they're both in the range, it's set aside. If it's really skewed, then you may have like a weird payoff. But yeah, so this is less important in spreads because you move liquidity from one place, put it to the other place. The one in the money amount you receive is paid on the other side. It's very, very flat.
Okay, well, a little bit of a deep dive there, but hopefully if you saw this new payoff curve and was wondering what is going on, that provides a little bit more intuition. But yes, feel free to ask any questions. Join our Discord channel if you're not. There's a great get help button here on the site if you ever have any questions. There,
if someone trades and we see the P&L being too red, we say seek help.
No, it's get help. Auto pop up for
That's
you.
Right.
Yeah, this has been great. The competition goes until June 30th, so still join in if you haven't already. There's prizes for the top 50 traders, and so almost everyone can win a prize potentially. Lots of points in USDC going out. Stay tuned Monday when we'll be back to analyze more trades with the intern, as you saw earlier. This basically we're teaching the intern how to trade options from start. So that's very fun to see. And stay tuned for the synthetics Panoptic perps options. Great debate that everyone has been anticipating on Tuesday. I believe it'll be on Twitter, but we'll post about that as well. And yeah, do you have any announcements or other final words of advice before we leave for the weekend and hope for the best in the markets?
No, I think, keep trading, stop losing, start trading. Again, we're doing something very unique, which is options on mainnet, but also options in a way that doesn't require market makers and intermediaries that kind of set the price, it's very, very fair in a way. So very cypherpunk if you think about it. It's not it's the market truly that drives the price and not something else. So very, very cool. Excited about this. So yeah, I think that's it. And again, enjoy the weekend. Sometimes there's a huge move during the weekend, so pay attention. But otherwise, yeah, don't spend your whole day trading.
It's addicting as it is.
All right.